Hey gang, happy Saturday. Funny comment there from
Beardy
funny comment there from another round of nothing burgers, please. I'm afraid no, this will not be nothing burgers. This is uncovering more things that are kind of a little bit concerning. But we're going to take a little step back in history. And first of all, thank you all for being here on a Saturday, a little bit later than normal. And of course, this is always edutainment, brought to you by black caffeinated beverages. So the story basically is how everything is interrelated. This is a quick graphic showing how all of this began, how everybody is in bed with everybody, from the Coinbases to the Panteras to the Jump Cryptos, the Delphi Labs to the Binance Labs to, lenders to Tether to exchanges to BlockFi, Voyager, CoinFlex, you name it, Babel Finance, BitMEX. Everybody has a piece in this. So we're going to examine who the latest players are impacted and how it all began. So first, let's look at the crypto market over the last 7 days. It is red and ugly deep red. Matic, ETH, BNB, Solana, big hit. Avalanche, Cardano, Tron, Near, all deep red. And of course, stable coins are holding up. No surprise there. Stocks the last 7 days real quick. Interesting mix. Some of the big tech has bounced. Some of the big tech has fallen hard, like Amazon, Microsoft, Tesla, all got kicks, but the other ones seem to have kind of bottomed. Of course, the big pharma companies, they were loving the G20 summit with the global vaccine passport idea and a whole bunch more. I think some of the military industrial complex stocks did well too, as well as energy hanging in there. So that's the world in a view. But let's talk about crypto for 1 second. Actually, we're going to talk more than 1 second on crypto. This is from Charlie Below. A big thank you to Sanjay for sharing. Here you see the crypto market cap since 2013, 10.6 billion. It halved the next year, 5.5, up to 7, up to 17.5. Then from 2016 to 2017, from 17.5 to 590 billion. That is a staggering jump. And then 2018, 128, 190, 768. 2021, 2.26 trillion. And 2022, 833 billion. We are still far, far above where we were 5 years ago because the whole sphere has gotten a lot larger. There's a lot more cryptos, a lot more value added. But Bitcoin isn't as dominant as it once was. Let's talk about what has happened to Bitcoin over the last 5 years. This is a simple little chart, and it shows Bitcoin normalized as of the 20th of November, 2017. 5 years ago, compared to Berkshire Hathaway. If you look at the relative value, you can see they are coinciding. Berkshire Hathaway is up about 172%, and Bitcoin up about 201%. So they are coming down together, which is unusual. We all know Bitcoin should be far, far outpacing Berkshire Hathaway, but it's not. But Berkshire Hathaway over the last 10 years hasn't been doing very well at all. But that's just a point in time of perspective of where we are. And those people who are late to getting into crypto, they're actually blessed than they were a while back. Let's look at another chart from Charlie Below. This looks at Bitcoin's 77% drawdown over the last year, is the largest since 2017, 2018. And at 364 days now, it's now the second longest, trailing only, I put in the two arrows, you got the 2017 one there, which was 363, we just eclipsed out 364, and the 30th of November 2013 to 2015, 410 days. That is kind of staggering, and that went all the way down to 85%. A lot of people are thinking, well, maybe this time it is the same. We had minus 85, minus 84, now we're minus 77%. But the key thing to look at is the actual gainers back percentage return to the new all-time high. So it was 585% in 2015 and 534% in 2018. Remember, the more it falls, the bigger the percentage gains. So, for example, I don't remember the exact numbers, but if Bitcoin falls, stays at 15,000 and then goes back up to a new all-time high versus 16,000, the impact on the percentage return is substantial in many, many scores of percentage points. And that's the math. So again, harder it falls, the biggest return. If you can nail that bottom, and we thought, in humility, we thought we had the bottom on the 16th of June at 17,500. Now we're 1,000 points less. Actually, we're 900 points less than we were back then. So that bottom was not the bottom during the summer. My bad. And, I thought we'd go lower if there was something like a tactical nuke, and nobody was expecting the fallout. And that's why we're going to look at it one more time and see what else we can identify as a potential problem. So first of all, a lot of this crypto fallout began because of the simple, easy cash and carry trade. And that was selling things like GBTC for a profit, investing in it. And that was it. And you can see that GBTC was trading at a big premium for the longest time up until early 2021. Then it started going negative. And early 2022, it started going real negative. And that is basically what broke a lot of the system, apart from speculation and things like Luna and everything else. So I did probably the biggest tweet of my life, asking for proof of reserves from Grayscale last Thursday. And they came out and said they will not share proof of reserves due to security concerns after its Bitcoin and Ether products fell to an all-time low this week. Now, crypto firms are under pressure to share information about the health of their reserves, especially after what happened recently. And it was actually CZ that came out with the idea of everybody should just share, be open and transparent as to what's going on. Now, what GBTC and Grayscale team did do is they did publish this. They gave us a safety, security, and transparency report, which is pretty credible when you dig into it. There's only two tiny little issues that were on my mind, but not that big. The question is, can we trust anybody these days? And that's what we always have to ask ourselves. So what is a Merkle tree, and what did CZ actually come up with? And Vitalik Buterin was very active today with his kind of pushing for an approach to helping centralized exchanges and other types of platforms be more transparent. And this is kind of what they call that Merkle tree technique. And I've had a lot of questions. What's a Merkle tree? Well, this is a simple visual from Vitalik himself, fresh off the press today. And this is a table of user balances is inserted into a Merkle tree sum, in which each node or leaf is kind of like a balance and a hash pair. The lowermost layer of nodes contains individual user balances and username hashes. And as you move up the tree, each node presents the sum of balances, and the nodes, etc., roll up to the overall bag that should be held. Of course, in real life, if you're looking at an exchange, this would be far more complex than that actual Merkle tree right there, but that gives you the idea. And it is possible to do, but it does require some work, and there are people looking to build solutions. But let's go back to where a lot of this began. Let's talk about Digital Currency Group, because they are in the spotlight right now. All eyes are on Barry Silbert. He's the head of DCG, and there is lots of concern around this operation. Now, for you that may not know, but you may know these platforms, you all know CoinDesk. It's kind of like the media arm of DCG, which I don't think really belongs there. An investment vehicle shouldn't necessarily have a media arm as well. Then they have Grayscale. We all know the concern about GBTC. And then Genesis Trading. It's not dissimilar when you think about it to how Alameda was alongside FTX. You had the exchange and then the trading arm. Again, they're probably, I expect, if ever regulation ever does come from our friends at the SEC and other places, they'll probably say, there can be, these things need to be separate and they can't be under the same holding company as they go forward. But let's dig into the relationship between GBTC, Genesis, Three Arrows Capital, and DCG. I typo there on the slide. Sorry, I'm alone today. It should be DCG, not DCGC. Sounds like something else. But basically, this maps it all out. So train your eye on the bottom left-hand corner, Mr. Hammer. Thank you so much. You rock. 3AC borrows Bitcoin from Genesis and as a lender with a small amount of collateral. And then 3AC passes this Bitcoin to Genesis as an authorized participant to create GBTC shares. Okay, I hope you're following me. It's a little bit complex, but the graphic makes it very easy to understand. Then Genesis duly locks the Bitcoin in the trust via the Grayscale and returns shares. Typically, the lockup is about 6 months. And these shares are then trading at a premium, so this represents free money to 3AC. Then 3AC, Three Arrows Capital, which is now defunct, pledges these shares back to Genesis for a USD loan. And if the premium was large enough, this loan is worth more than the Bitcoin they borrowed at the beginning. And then 6 months after creating GBTC, you can sell it, redeem it. And that was the whole deal and how this whole thing was set up. And based on the premium, the discount chart above that chart you see, somebody did a lot of selling. And if the price is too low, there are two big problems. Number one, 3 Arrows Capital can't repay the US dollar loan, and then 3 Arrows Capital can't repay the Bitcoin loan. So it's like a double borrow problem, not a double spend problem. And if this is right, then Genesis financed this whole fiasco. They lent 3 Arrows Capital Bitcoin and then effectively lent them more dollars against those very Bitcoin. And it sounds completely absurd because it is. It is a massive problem. They're not going to get away with it again. But let's look at DCG and what they actually hold in terms of Grayscale Bitcoin Trust. You can see here, they are by far the biggest whale. Number one position, this is from Bloomberg, and they have 28.08 million shares of GBTC, which is a massive stack. Now let's go back in history. A couple of things to look at. BlockFi had a huge position only a couple of months ago. They dumped 100% of their bags, hence brought a lot of selling pressure to GBTC. And then also 3AC dumped all of their bags. Again, they're gone from the list, and they were on this list last time I pulled this report. And DCG is now the largest holder of its subsidiaries Bitcoin Trust, all resulting from a huge 42% discount. So the question is, you look at the size of these bags, who is left holding the bag? It's DCG. And that is a problem. They have a hole. They have a hole for a couple of reasons. I'll talk about them in a second. But first, DCG has gone to market trying to raise $1 billion. And this is from Andrew AP Archpublic. And again, thank you to Sanjay for sharing. I just got this right before I streamed. I didn't actually see this tweet. So thank you so much for that. And he said, absolutely nobody is biting on the $1 billion raise for DCG and Genesis. Closed doors and lots of, hey, don't even send us the deck replies. And this is a big time ripple for the effects potentially coming next week. And there are verified turndowns from Novogratz, who has his own set of problems. They've been hit with every poop storm you can imagine. And the Winklevi twins, that's Novogratz is from Galaxy, Winklevi are from Gemini. Of course, Gemini Lend was impacted by Genesis, and we spoke about that earlier in the week. They all have serious issues. And again, from the very first slide, everything is connected. Everything is hitting the wall and everything is smashing. Let's talk about another firm, Silvergate. This is another interesting case, again, related to the space, but unrelated, kind of on the periphery. But Silvergate is a capital holding company, and it's a federally regulated banking institution. And as per Q3 10Q, their assets were about $15.5 billion, liabilities $14.1 billion, shareholder equity $1.33 billion. But that's all just been blasted because they had $1.2 billion on FTX, wiping out the shareholder equity, and they also had a redemption of nearly $1 billion over the last week. And in addition, this is the added kicker, the bank was also recently subpoenaed and allegedly found to have $425 million in transfers amongst its crypto bank accounts in South American money launderers. I mean, it's staggering, the stuff. And this SI firm, they have top customers: Coinbase, Kraken, Gemini, Genesis, Circle, Bitstamp, Paxos, FTX. It's like everybody's sleeping with each other. It is stunning. And this is all just coming to light now. Now, back to this guy, Neil Kashkari. He came out today and he said, this isn't a case of one fraudulent company in a serious industry. He said this on Twitter, commenting on an article about how investors fell for FTX. He said, the entire notion of crypto is nonsense, not useful for payments, no inflation hedge, no scarcity, no taxing authority, just a tool of speculation and greater fools. And I agree with him with about 98% of crypto, 99% perhaps, but not for things like scarcity, Bitcoin, because then he's kind of wrong. In addition, Neil is, we're all wrong, we're all human, but he did say this in late 2021, I think it was November, December 2021. He said, we will he expects the US central bank to keep rates at zero until at least 2024. And he was kind of off the mark about that. So he's gone from being extreme dove to extreme hawk in the space of a month. And that was between, I think, December 2021 and January 2022. And I think even in January 2022, he said there'd only be 2 small hikes, maybe in 2022. He was off. So again, nobody is perfect. Not Neil, not myself, not anybody else. Let's talk about a little bit of related crypto news, but tied to Twitter. And they have their own set of storms right now. But unfortunately, the Twitter's head of crypto has resigned. There's also been a continued mass exodus of employees that have chosen to take the severance deal from Elon Musk as an offer rather than diehard commitment to the job. And all the engineers were summoned. I don't think they could all get there in time. They were only summoned late last night or Friday to go to the office today in San Francisco. I don't know if they're going to make it, but here I think there's a lot of fear that Twitter is teetering on the edge after another 1,200 people left. His emails have not been well received. He's probably learning a lesson in more gentler management and leadership. This is not a Tesla factory. It's a very, very different animal. And he's learning that. And key infrastructure has been decimated. And a lot of people are worried, will the lights of Twitter stay on, remain on? We'll see. It'll be interesting. But again, I saw one report where of the top 100 engineers, there's only 3 left. Only 3 decided to stay, which is staggering. So let's watch it carefully. But as a testament as well to Twitter, even if that's true and all these engineers have left, it's still running, it's still operating. So we'll see where all this goes. And hopefully Elon Musk can get back to Tesla real soon. So with that, everybody, happy Saturday. Sorry I don't have kinder news, but this whole cryptoverse is a complete mess. Everything is related and more things will hit the wall next week. Nobody is bidding on certain crypto assets, therefore prices falling as people are selling. And nobody is bidding to bail out the companies that have severe holes. And there are lots of them that have holes all across the board. So with that, everybody, see you tomorrow for the live Q&A, answering your top 10 questions from the week. And there are some complex ones and also some very important ones as well around self-custody. So thank you all, everybody. Have a good weekend. See you tomorrow. Bye.